All right, let's get ready to untangle things. Today, we're going deep into the world of wires and cables with KEI Industries' latest earnings call. You know, you sent over their Q3 FY25 report, and wow, there's a lot to cover here.
Yeah, earnings calls can be a gold mine, right? But
Yeah,
sometimes it
yeah.
feels like you're trying to decipher a circuit diagram without a key. We're here to
Blah!
break it all down, help you make sense of the numbers and all the jargon.
Yeah, think about it like this. KEI's got this crazy goal. They want to hit a 25,000 crore turnover by 2030. I mean, that's like rewiring the whole planet, right? So we're going to explore how they think they're going to pull that off, why they're going all in on exports, even with some of, the hiccups along the way, and how they're handling the copper market. Because, oh boy, copper prices are like a roller coaster ride these days.
Definitely. To start, let's do a quick overview, just a refresh. KEI Industries, they're a big deal in the wires and cables business, right? They've been crushing it, like consistently. A 15% volume growth, that's their CAGR, over the last 15 years, which is impressive when you consider, again, how unpredictable copper prices can be.
Yeah, for sure. And that steady growth they've had makes their performance in Q3 FY25 even more interesting. Their net sales, 2,467.27 crore, almost a 20% jump. And their profit after tax came in at a cool 164.81 crore. That's up over 9%. Clearly, they're doing a lot of things right.
Absolutely. If we zoom in on the details, we see this big 45% surge in their domestic institutional sales for wires and cables. That shows you, businesses, government projects, there's a lot of demand there, a good sign for the overall economy.
But then we see this strange thing. Their extra high voltage cable sales, or EHV, they completely tanked, like a 78% drop. It's like a blackout for that part of their business. What the heck happened there?
So it seems like some bureaucratic stuff like permits and clearances for EHV projects got delayed. It really messed things up. But here's the thing, KEI, they're smart. Instead of letting their EHV capacity just sit there doing nothing, they used it to make high-tension cables instead, the HT cables. You know, Now that's what I call thinking on your feet.
So they basically dodged a bullet, avoided a potential loss by switching gears. It makes you think, is the demand for those HT cables, is that a bit more stable? Could this move end up giving them a real advantage down the road?
No, that's a great question. While those EHV projects, they're usually big money, but they don't happen that often. The HT cables, it's likely they have a more consistent demand,
Mm-hmm.
especially with all the infrastructure development going on across the country. So yeah, KEI's move, it could put them in a really good spot for, steady income.
Gotcha. Okay, so EHV sales were down, but their retail segment, booming. They had 31% growth in Q3. They totally crushed their retail sales target, even with reports saying the wire market was slowing down. How are they doing this? It's like they're defying gravity.
Well, they say it's all about their three-pronged approach, as they call it. More retail stores, reaching more places geographically, and something interesting, they call it influencer activity.
Wait a minute. Influencers for wires and cables. Okay, I'm definitely curious now. What does that even look like? Are we talking about like electricians with millions of followers on TikTok?
Uh-huh. I know, it sounds strange. But it's actually a pretty clever strategy when you think about it. In the construction world, in electrical work, people really value recommendations from the experts. KEI is likely tapping into those networks, partnering with people in the industry who can, vouch for their products.
Okay, so it's like word of mouth, but like supercharged. That's pretty smart. Now, let's zoom out, look at the global picture. They had a 6% growth in export sales, even with a dip in their EPC project sales. Clearly, they're setting their sights on expanding internationally.
Yeah, and they're not just dipping their toes in the water. Their goal is for exports to be 15–17% of their total sales within like the next 2–3 years.
Yeah.
That's a big jump from where they are now.
So where are they focusing their energy? On the global stage, I mean.
Laser focused on the US and Australia, aiming for a cool 500 crore in US sales next year alone. Right now, their US sales are basically nothing.
Wow, that's a bold move. Breaking into a new market, especially one as tough as the US, it's not easy. You've got tariffs, regulations, competition from companies that are already established there. It's not just about making a good product. You have to really understand how the US market works.
You're right, there are definitely risks, things they can't completely control. Like, what if the US government changes its policies? That could change everything overnight. But KEI seems aware of those challenges. Hopefully they factor that into their plan.
Okay, so to fuel all this growth they're talking about, they need some serious muscle. And that brings us to capacity expansion. They just finished a brownfield expansion, boosted their capacity for wires and power cables. That move alone should lead to 16–17% volume growth this year.
But hold on. There's more. They're also starting a huge greenfield expansion project in Gujarat. This thing is going to cost them, wait for it, 801,000 crore. Phase 1 should be up and running by the end of Q1 FY26. They're not messing around. They're thinking big.
Yeah, it's like they're building this high voltage superhighway for their future growth. This expansion is probably going to help them keep that awesome 19–20% volume growth we talked about. This isn't a sprint for them, it's a marathon.
And they're being smart about how they're paying for it. Remember that 2,000 crore they raised through that QIP thing, the qualified institutional placement? That's a lot of cash coming in. It'll help them with their expansion, and it means they don't have to rely as much on debt financing. It's a good move to strengthen their financial base.
Makes sense. Now let's talk about margins. KEI's current EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization. For anyone who needs a reminder, it's around 11% right now. Not bad, but they want more. They're aiming for 12.5% by FY27-28. So how are they going to close that gap?
Well, their margins right now, they're different depending on which part of the business you look at. Exports and retail, those are both at 11%. Institutional sales, 10.5%. Their EHV segment, that's the highest, 14–15%. And their EPC business is somewhere between 12–14%.
Okay, so it's all over the place. What's their plan to bring up the overall margin?
Their strategy. It's about scale and efficiency. When their new facilities are up and running and they're producing more, their fixed costs per unit are going to go down, which means higher margins.
It's like that classic buy in bulk, save money thing. But applied to manufacturing, the more you make, the less it costs to make each thing, and the more profit you can potentially make. But it's not just about making more, right? It's about being smarter about how you make things.
You got it. They're constantly tweaking things, making their operations better, investing in new technology to boost productivity. All that work will eventually lead to better margins in the long run.
So they're not just scaling up, they're leveling up their game. And now for the big finish. KEI's 2030 vision. Get ready for this. They're aiming for a turnover of 25,000 crore. Is that just corporate hype, or is there really something behind this ambitious goal?
It's a big goal, for sure. But they have a clear plan to get there. They're focusing on capacity expansion, growing their exports, expanding their product range, and making smart decisions about their workforce. They're not just guessing, they have a strategy.
Before we move on, let's take a second to consider something. What are the key takeaways here for someone looking at KEI as an investor?
What jumps out at me is their consistent growth, their smart approach to dealing with market challenges, and their willingness to invest big in future opportunities. They're a company with a clear vision, and they're determined to make it happen.
Yeah, they're not afraid to make big moves and to adjust their plans when things change. That kind of flexibility is crucial in today's world.
Yeah, they're not just reacting, they're proactive.
It reminds me of something you mentioned before about how KEI defines the wire market. It seems like they're lumping both wires and cables together, which could explain why their retail numbers are so good, even with the industry slowdown.
Oh, that's a sharp observation.
Yeah.
Yeah, their approach of offering both wires and cables all under one brand, that probably gives them a big advantage. They can meet a wider range of customer needs. They basically become a one-stop shop for all things electrical.
Right. It's a smart way to grab more market share. While other companies are focusing on just wires or just cables, KEI's got it all. And speaking of expanding their reach, their export goals, those are really something. They're not just satisfied with owning the domestic market, they want a piece of the global action.
And it makes perfect sense. The global market for wires and cables is huge. Massive potential for growth there.
Yeah.
By diversifying, they're not putting all their eggs in one basket, so to speak. They're reducing their reliance on any one market and, spreading the risk.
But let's be realistic. Breaking into the U.S. market is no walk in the park. They're going to be up against some big players, and they'll have to deal with all those regulations. It's not enough to just make great products. You have to really understand the U.S. market.
True, but it seems like they're going about it strategically. Maybe targeting niche markets, building relationships, and perhaps even using their tunnel plant technology, something we haven't talked about yet.
Tunnel plant. Okay, now I'm really intrigued. Is that like some secret underground facility where they're making super cables or something?
Not exactly a secret facility,
Huh.
but it is cutting-edge technology. They're putting it into their new plant in Gujarat. It's not a literal tunnel. It's more like a super advanced system for making those EHV cables.
So this is connected to their export strategy. They mentioned in the call that this tech lets them ship longer cables on a single drum, which is a big plus in the international market.
Exactly. Longer cables mean fewer joints, which means they're more reliable and cheaper to install. That's a major selling point for KEI. especially when they're competing with companies that might not have that capability.
So it's a strategic investment, not just in expanding their capacity, but in technology that gives them an edge. And this focus on innovation, combined with their financial discipline, it paints a picture of a company that's in it for the long haul.
Yeah, they're investing heavily in growth, managing their debt carefully,
Yeah.
aiming for steady improvement in their margins. It's a balancing act, and they seem to be doing it well.
And don't forget that ambitious 2030 vision, hitting 25,000 crore in turnover. It sounded a little crazy at first, but considering their track record and all the moves they're making, it's starting to feel
I
possible.
know, right? They've shown time and again that they can grow and execute their plans. Plus, their commitment to investing in things like capacity expansion, R&D, and attracting talent, it shows they're serious about reaching that goal.
Their story so far is fascinating. They're able to respond quickly to changes in the market, but they also have this long-term vision that's ambitious, but also realistic. They're not afraid to take risks, like shifting from EHV to HT production or entering a new market like the US.
And they're doing all this while staying financially stable and constantly pushing to improve their margins. They're not just chasing growth for growth's sake. They're building a business that can last.
It's a good reminder that even in industries that seem pretty traditional, like wires and cables, there's always room for change and opportunity for those who are willing to innovate and adapt.
Absolutely. And KEI seems determined to lead the way. They're not just reacting to the market, they're shaping it.
Speaking of shaping the future, there's something else we should touch on. Sustainability. Did KEI talk about that during the call? It's a big deal these days for investors and consumers alike.
You're right. Sustainability is a must-have now, not just a nice-to-have. They didn't go into a lot of detail. But they did mention their commitment to being environmentally responsible. They talked about reducing waste, saving energy, and using sustainable sources.
It's good to hear they're on board with that. I'm
Hmm.
curious to see how they develop their sustainability initiatives and how they make it part of their overall strategy.
I agree. Sustainability could be a way for them to stand out from the crowd and really become an industry leader.
All right, before we finish up this part of our deep dive, let's go back to KEI's success in the retail market. We talked about their smart branding strategy, offering both wires and cables under one brand, but there was something else that caught my attention. Their emphasis on influencer activity.
Ah, yes, they're venturing into the world of influencer marketing. It's not something you'd normally associate with wires and cables, which is why it's so interesting.
Exactly. I'm still picturing electricians with millions of Instagram followers sharing tips on how to install KEI cables. But seriously, how do you think they're using influencers in this industry?
It's probably a multi-pronged approach. Maybe they're partnering with well-known electricians, contractors, or even architects who use these products for big projects. These influencers could be sharing their experiences with KEI products, talking about their quality and reliability.
It's a great way to build trust and credibility. In an industry where reputation is everything, having these trusted voices vouch for your products can make all the difference.
Absolutely. It's like they're tapping into this network of experts who can reach the exact audience they want.
Yeah.
It's much more effective than traditional advertising, especially in a field where technical expertise and experience are so valued.
So KEI might be playing the long game with capacity expansion and global ambitions, but they're also thinking outside the box when it comes to marketing and branding.
Yeah, it's this combination of strategic vision and tactical execution. That makes them such a fascinating company to study. They're not just checking boxes, they're really thinking critically about every part of their business.
And that's what makes this deep dive so interesting. We're not just looking at numbers on a page. We're uncovering the story of a company that's constantly evolving and innovating.
It's a reminder that even in an industry like wires and cables, which might seem kind of old school, there's always change happening. And there's opportunity for those who are willing to embrace it.
So as we move into the last part of our deep dive, let's shift our focus to some of the questions and potential challenges that came up during the earnings call. Because let's be honest, no company's journey is without its bumps in the road. Okay, let's address the big one, that 78% drop in EHV sales. It's a bold move to be, doubling down on capacity expansion for EHV cables when that segment just took a big hit. What do you make of that?
Yeah, that was definitely a hot topic during the call. A lot of analysts were wondering about that. KEI admitted that EHV projects could be really unpredictable. They're often tied to these huge infrastructure projects, and those can get delayed for all sorts of reasons.
So it might not be a sign that KEI is doing something wrong, just that the EHV market is like cyclical. But how are they planning to deal with that risk going forward, especially with these big expansion plans?
They emphasize their diverse portfolio, you know. So while EHV is important to them, it's not their only focus. They've got growth in retail, exports, and they made that smart move to produce HD cables. It shows they can adapt and find opportunities, even when one part of their business isn't doing so well.
It's like they have a backup plan, right? Something to cushion the blow if one area takes a hit. Let's talk about another important number that came up during the call, margins. They're shooting for a 12.5% EBITDA margin by FY27-28. Some analysts were curious about how they plan to get there.
Their plan is all about scale and efficiency. As those new facilities start operating and they're producing more, their fixed cost per unit will go down. That, plus their work on optimizing operations and using technology,
Yeah.
should push those margins higher.
Right. It's a good example of how investing in both capacity and efficiency can drive growth. But it's not just about making as much profit as possible. It's also about keeping up with what the market wants. One question that came up was about sustainability. What did KEI say about their commitment to, being environmentally responsible?
They didn't get into all the specifics,
Yeah.
but they did say that sustainability is important to them. They talked about reducing waste, saving energy, and making sure they're sourcing materials responsibly.
Okay, it's good to know they're taking steps in the right direction. Sustainability isn't just a trend anymore. It's something that consumers and investors really care about.
Absolutely. It'll be interesting to see how they develop those sustainability initiatives. Yeah. And how they integrate them into their overall strategy.
As we wrap up our deep dive into KEI Industries, what would you say is the most interesting part of their story?
I think it's their ability to balance ambition with practicality.
Mm-hmm.
They have this big, bold vision for the future. They want to grow a lot and become a leader in the global market. But they're also being smart about it. They're thinking things through, considering the challenges and adapting to the market.
They're not just chasing the next big thing. We're building a foundation for long-term success. They're definitely a company on the move. I'm excited to see what they do next. And there you have it. We've untangled those wires and cables, deciphered all the jargon. Hopefully you have a clearer picture of KEI Industries now and their ambitious plans. If you're as intrigued as we are, check out their website or follow them on social media. Stay up to date on what they're doing. Until next time, keep diving deep.